Bloomberg Audio Studios. Podcasts, radio, news.
This is the Bloomberg Daybreak Europe podcast, available every morning on Apple, Spotify or wherever you listen. It's Tuesday, the 5th of March in London. I'm Caroline Hepker.
And I'm Stephen Carroll. Coming up today.
The reality is stronger than the sort of naysayers would say. Life's about how you do versus expectations, isn't it, often? And hopefully 24 will be a year where things get better.
Is there a more bullish case for Britain's economy? WPP's CEO Mark Reed is one of the business leaders who told us he's more optimistic. We have a special report ahead of the Chancellor's budget.
Plus, growth on paper. China sets its GDP expansion target at around 5% as foreign businesses worry about a lack of transparency.
Let's start with a roundup of our top stories.
Some of Britain's top business leaders say confidence is returning to the UK after years of disruption. A 2-month investigation by Bloomberg Radio found London's business elite increasingly upbeat about the future of the economy. Lloyds of London CEO John Neal told us the city is on the right path.
Yeah, we've seen a wealth of delisting on the FTSE. We've seen real challenges around investment and funding in the UK. We need to get that back on track. You know, part of the livelihood and well-being of UK PLC is as a global financial services centre. I think we're starting to get that right, but I wouldn't say that journey is yet complete.
Neil and other executives we've spoken to see the UK as a relative safe haven ahead of this year's election. Official figures suggest the UK remains the second highest destination globally for greenfield foreign investment after the United States.
China has set its growth target for this year at around 5%, matching last year's figure despite a higher base of comparison. The move raises expectations for leaders to unleash more stimulus to bolster the Chinese economy. In his first work report to the National People's Congress, Premier Li Qiang acknowledged the challenges facing the world's second largest economy.
The external environment is more complex, severe and uncertain, and the growth at home is not solid enough, and the expectation is low, and a small and medium-sized enterprises face difficulties in their operation, and we have seen the pressures from overall job creation and employment problems.
The Chinese premier speaking through a translator. He also announced plans to issue 1 trillion yuan, that is about $139 billion US dollars, of ultra-long special government bonds in order to support what Beijing is calling key national strategies.
AMD has hit a US government roadblock after trying to sell an AI chip tailored for China. Bloomberg has learned the chipmaker sought America's approval for a semiconductor tailored to US export restrictions but was rejected. The US has been working to limit Chinese access to cutting-edge semiconductors out of fear that Beijing will gain a military edge.
The dramatic rally in US tech stocks has left JPMorgan and Goldman Sachs with opposing views as the banks attribute the market conditions to different drivers. To JPMorgan's chief market strategist Marko Kolanovic, the advances in US equities and Bitcoin's surge above $60,000 signal that there is froth in the market. Goldman Sachs' David Costin has argued that big tech's valuations are supported by fundamentals, warranting the risk-on mood. The major gains in the technology giants have driven the S&P 500 index to new highs, with the S&P setting 15 closing records in 2024 so far, fueling the debate between bulls and bears.
A group of banks spearheaded by Morgan Stanley has held refinancing talks with Elon Musk over debt linked to his takeover of the social media platform X. The talks centred on $12.5 billion of debt, which supported Musk's move to take the company private in 2022. Sources have told Bloomberg they discussed options to reduce the cost of the debt and make it less risky for banks to hold. The 7 lenders have repeatedly renewed an agreement not to offload their holdings until the social media platform is on a firmer financial footing.
The US Supreme Court has ruled that Donald Trump can appear on presidential ballots. The decision comes after nationwide efforts to ban him, citing a constitutional provision preventing insurrectionists from holding office. The Colorado Supreme Court's earlier decree against Trump's right to run for a second presidential term was overturned unanimously. The former president said the result was a milestone.
I think it's a very big day for America. I think it's a very big day for liberty, and I think it's just a great day for this country.
Donald Trump speaking there. His Republican opponent, Nikki Haley, also praised the move.
I'll defeat Donald Trump fair and square, but I want him on that ballot.
Nikki Haley is trailing Donald Trump by 64 points in national polls ahead of today's Super Tuesday primary votes in 15 US states.
Now, we're just a day away from the budget here in the UK, a moment when the public finances and economic outlook for Britain are a subject of national conversation. Business and consumer confidence are key to the UK's success. So after a rocky few years, are things improving? Caroline, you've been taking the temperature with FTSE 100 CEOs and chairs ahead of tomorrow's announcements from the Chancellor and asking them if there's a more positive case to be made for Britain.
Yeah, the thought around this was that last year was such a difficult year for Britain, and I did a long print and radio piece in April called Britain Adrift, whether the economy was adrift and sort of uninvestable in Britain. Microsoft's Brad Smith, if you remember, he said that the EU was a better place to do business at the time. That really stung. And then there were other criticisms from Dyson and AstraZeneca and many quite loud, plus the ARM vote to list in the US, not in London. That really rattled a lot of people, I think. 10 months later, though, the data and the mood does seem to have changed quite significantly. Economists and business leaders have moved on. And so, for example, WPP's Mark Reed telling me that he's more hopeful about 2024 being a year where things are going to get better as they go along, unlike 2023. Simon Carter, the CEO of British Land, saying that he's cautiously optimistic. Berenberg and Deutsche Bank economists pointing to the resilience of the UK, the silver linings of the UK, and a host of other CEOs really sounding a lot more confident, welcoming some of the government initiatives, looking ahead to the election year that's going to be so important. So, yes, as you say, went out and did a number of big interviews with FTSE 100 CEOs and chairs over the last few weeks, major UK businesses. Here is the result. Have a listen. In the UK, you learn to love the weather. You have to. But when the economy has been as clouded over as it has been recently, you start to long for any glimmer of sunshine. Last year it was a drizzly day when I spoke to the Marks & Spencer chairman, Archie Norman, at the company's head office in Paddington. The drizzle rather matched his mood at the time. He was deeply concerned about post-Brexit Britain. Since then, we know the UK's gone into recession. So with that in mind, and the rain, of course, still coming down, I asked if his forecast is just as downbeat.
When you're running a business like M&S, our philosophy is we row our own boat, and the seas are choppy or the seas are calm, but our job is to make the boat go faster. Actually, our success is more to do with how successful we are in reshaping M&S than what happens in the market. And, we've had a decent run, but there's a long way further to go.
While Norman puts the success of Marks & Spencer down to the way that it's run, he does see light on the horizon for the consumer, and that will help his business and many others.
Very importantly, wages are now rising faster than inflation, faster than prices, so people are genuinely better off on average.
From the iconic British retailer to one of the country's largest pension providers, Legal & General Investment Management manages pensions for 5 million people. Michelle Scrimgeour is the CEO.
It's easier to focus on the challenges when you're looking outside the window of our UK headquarters and it's raining down and it's a grey day here in London. Actually, the UK has been an amazing home for Legal & General for over 180 years.
But what of this year or next year? Will the UK see significant improvements in growth and wealth?
So if you think about where the world is today, there is a lot of uncertainty. There is geopolitical uncertainty, there is uncertainty around interest rates. We're no different in the UK. We're part of that big ecosystem. But if I think about where things could go better, for sure, we're still in a post-COVID environment. We're still in a post-energy crisis environment. That isn't going away. it is working through. So as things work through, there is certainly an opportunity for interest rates to come down. Yes, we're in a technical recession, but as rates come down and that frees up more capital, and it actually has an impact on individuals and where they are, because don't forget there's a cost of living challenge here at an individual level, not just an economic challenge for the country. I do think there is opportunity.
LGIM's Michelle Scrimgeour seeing opportunities. So is it the start of a more bullish British economy? To know that, you also have to get at the heart of what drives economic sentiment for a large slice of the UK, the property market.
If mortgage rates do go much higher, then that would almost certainly become a problem.
Property prices fell in July at their fastest pace since the global financial crisis for the third month in a row.
The housing market is on track to see the lowest level of home sales since 2012.
But although house prices declined last year, they avoided predictions of a collapse. And while office rents in the US fell, in the UK that was not the case. British Land CEO Simon Carter told me he's now hopeful.
For us, what really matters is unemployment. If people have money in their pocket, they spend at our retail assets. I think it's encouraging that we might see real wage growth. That helps because we haven't seen a lot of that. And similarly, when we're leasing office space, what matters is we do top-end office space and it's headquarter space where businesses are using it to attract and retain talent. And of course, they want to attract and retain talent when unemployment is low. So I think if we can see a situation where unemployment remains relatively low, the economy grows a little bit and we see a bit of real wage growth, the momentum that we've seen over the last couple of years can continue. Because that's been the odd thing in the property market, that the investment market, because of higher interest rates, has struggled, but actually occupationally it's been very good and people have taken space.
So momentum in the right direction, but what about some acceleration? To get that, you need to tap into the buzzword on every CEO's lips.
AI is going to be important. We believe, we're excited about it.
We're addressing some of the most profound social challenges with AI in ways that are transformative.
AI is going to change the nature of jobs.
We believe that AI is the most profound opportunity in our lifetimes.
You heard executives mention the word AI about 50 times.
Advertising giant WPP's CEO Mark Read is focused on the benefits this once-in-a-generation technology could deliver for Britain.
I think it's a massive opportunity for us. I mean, at one level you could say, well, the large language models, they're all being created in America. But actually, what you can do with AI is get access to these models extremely cheaply. You know, we're not investing billions of dollars at WPP in AI. We can't afford it. But we are using the models created by OpenAI and Microsoft and Google and others to power our work. And so it's really about the application of technology. And as you say, because we're a service-based economy, it could make our service structure much, much more productive, much, much more efficient. And I just think we have to lean into it and embrace it.
WPP is planning to spend about £250 million a year on AI technology. Microsoft is investing £2.5 billion in UK AI data centres over 3 years. And the government says that it wants Britain to be focused on reaping the rewards from the AI gold rush. Here's the Deputy Prime Minister Oliver Dowden speaking to Bloomberg at last year's AI summit.
If you think about how financial services and the City of London have so enriched the United Kingdom over the past generation or two, I'm convinced that AI can do the same thing for the UK over generations to come.
So the government is persuaded of the benefits of artificial intelligence. But John Neal, the CEO of Lloyd's of London, says better performance also needs political stability.
I think we all need the confidence of a two-term government, whatever that government is, because I think the issues that we're grappling with, and the need for confidence and the lack of the confidence that whether it's the public or whether it's business, we just need the sense that there is a plan, and that plan is going to have to stretch beyond one term of government. So I would say we need change. And I'm not saying that has to be a Labour government versus a Conservative government. We do need to change. We cannot carry on the way we are.
And he's concerned that even with the attempts by the big political parties to woo the city, too much is still being taken for granted.
Our advantage in insurance is the only marketplace for insurance in the world is here. There isn't another one. And I think we are standing up and representing the best of that, or doing our best to illustrate how that value can be. We're growing, we're profitable. We need to be profitable if we're going to innovate and reinvest in what the future looks like. I don't think the same is quite true everywhere in financial services. We've seen a wealth of delisting on the FTSE. We've seen real challenges around investment and funding in the UK. We need to get that back on track. Part of the livelihood and well-being of UK PLC is as a global financial services centre.
There's a lot of ground to make up, even with the Chancellor Jeremy Hunt's Mansion House reforms. The FTSE 100 has lagged global markets since 2008. Investors pulled a record $29 billion from UK equity funds last year. And Europe's TUI announced recently it will delist from London. Those numbers are not lost on other CEOs we spoke to. Here's WPP's Mark Reed again.
I've learned as CEO never really to comment on our share price. But I mean, you can but look at your valuation relative to your peers in other markets and think, there are some possible attractions to being in the US, though I think the complexities of it make it very difficult, really, in reality, for most companies. And what we really need to do is get UK pension funds investing back in the UK market, because, ultimately, we have a sizable stock market, and if it's not being supported by UK pension funds, why would international pension funds support us?
So the UK economy is still under a cloud, and no one expects rapid growth tomorrow. But there is hope that it could stop being rained on and at last enjoy some sunshine.
Okay, well, fittingly, Caroline, this morning there's no rain outside. The sun is just about rising outside in the city of London. So much to unpack in this report. Lots of really key voices from very diverse industries across the UK economy. Put this in perspective for us. How much is confidence improving? What's driving that?
So I think it's first and foremost, inflation coming down. That was a big issue last year. Also, the possibility of interest rate cuts. All of those CEOs were talking about those as two main drivers, plus wages going up. And they have gone up for 6 months now. So that's massively important. Bloomberg Economics thinks that the economy in the UK could grow by 1% this year, but 1.9% if consumers feel more confident and spend their savings. That would be a big difference. So you heard from the Marks and Spencer chair, Archie Norman, there saying people are genuinely better off on average. So that sort of gets past the technical recession that we saw at the end of last year. Maybe that's the worst of it. More long-term, business investment is up 6.1% year on year in 2023, and artificial intelligence is already being adopted across businesses like M&S, but also like WPP. That could really improve one of the main long-term weak spots, and that is UK productivity. So Mark Reed saying it's already seeing 20 to 25% improvements in productivity for some of their people. And I also spoke to Matt Clifford, who created the Prime Minister's Artificial Intelligence Safety Summit last year. And I mean, you don't get more bullish than him.
Yeah, I mean, this is also an election year, and this is part of the conversation that you were having with these business leaders too. Are they warm about Keir Starmer's Labour Party, of course, leading in the polls?
Yes, I can't say that they're not. What they want, though, is consensus on growth, something that a lot of them do see. They want long-term policy making. I was surprised by how often this idea of having a 2-term government came up for business leaders. Archie Norman saying you have to have a 10-year consistent approach. Everyone recognises this problem of how you rekindle growth now. Also the fact that they are really two centrists in Keir Starmer and Rishi Sunak vying for power. And that is quite reassuring. Lloyds of London CEO John Neal said that you need the confidence, as you just heard there, of a 2-term government. And then you do see things like British Land joining the Labour-led Building Back Britain Commission, for example. But I think Legal and General Investment Management's Michelle Scrimgeour kind of put it quite neatly. It's less about politics. It is more about, in her words, stability, clarity and consistency. So there still is a long way to go for Britain.
But is there a gap too between investors and these business leaders?
Perhaps. Quite sobering, because along with this deep dive reporting that I did with my colleague in print, Philip Aldrich, we also put out one of our regular MLive surveys of investors on the Bloomberg terminal. And we asked them this question: do you think that living standards in the UK in 5 years' time are going to go up, go down or stay the same? Out of 463 investors that we surveyed, 48% said that they expected living standards in the UK to decline versus G7 peers over 5 years. 35% no change. Only 17% said that British living standards would improve. That is, pretty sobering stuff. Surely that is something that the UK has to improve. We've got to improve confidence, inward investment and so many other points, to make the kind of slightly brighter economic picture a much more decisive reality.
OK, well, this is part of our special featuring of this reporting on the bullish case for Britain. You can read more on the Bloomberg terminal and on the Bloomberg website with a piece by our colleague Philip Aldrich. This is Bloomberg Daybreak Europe, your morning brief on the stories making news from London to Wall Street and beyond.
Look for us on your podcast feed every morning on Apple, Spotify and anywhere else you get your podcasts.
You can also listen live each morning on London DAB Radio, the Bloomberg Business app and Bloomberg.com.
Our flagship New York station is also available on your Amazon Alexa devices. Just say, Alexa, play Bloomberg 1130. I'm Caroline Hepker.
And I'm Stephen Carroll. Join us again tomorrow morning for all the news you need to start your day, right here on Bloomberg Daybreak Europe.